Welcome back. So in this video, I want to show you a new indicator. Now, this is not me. This is an indicator that I have access to, how to get it, how to use it effectively. Many of the time, people don't pay attention. They don't watch the video to the end. Please watch. It's just a short video, and I'm explaining how you can use it effectively. It's smart money concept indicator made by XAUUSD. And if you come here, you can make some tweak to the whole stuff. You can decide to show in and out and all of that. But let's just see it at the default settings that it is in case for anybody. So this is it. It will just show you all of these things, the mark, the order block, the break of structure, the change of character. Now the question is, you see all of this, how will you be able to interpret it? Now, one thing about me is that I am practical in nature. I have done a video, I actually took through today using the strategy I want to explain and how you can spot it using this indicator. So what I will tell you is what we have used today. Go to my Telegram channel right now while you're watching the video. You will see the gold signal that was given this morning that gave 700 pips straight. So you want to catch the same method, you want to catch more than that, pay attention and understand. What you notice is that on Friday, the market created a buy-side liquidity. Now you may not know it personally, don't worry. This indicator will mark it for you. It may not call it buy-side liquidity. That's why I'm working on my own improved version. And it's going to tell you buy-side liquidity from sell-side liquidity, and there's the distinguish between it and break of structure. You can pre-order that indicator, which will be ready before Friday, and everybody will have access to it on Friday. You can pre-order before Friday at the rate of $20. And if you pre-order it at $20, you will get it. I'll show you towards the end of this video that indicator if you have interest, but just watch this particular one by XAUUSD. So now you can see that it marked this liquidity, buy-side liquidity that was created. Okay, so after this buy-side liquidity was created on Friday, there is internal liquidity of that same buy-side liquidity. That's the low, because you might not call it the internal sell-side liquidity, but you should understand the low that the market creates, that particular high, the low that it has. Now, this is the low that it has on that Friday. Don't forget the high and the low. So on Sunday night, which is the opening of the market for the new week, the market quickly rally up when the new session opened, I believe, Asia session when it opens. Because I don't believe it's Tokyo. Just forgive me if you understand what I mean like that. So we understand session have been traded. I've been focusing on synthetic for enough period of time. So now we actually have the market sweep that liquidity. Now, when the liquidity is sweep, is not the best time to enter. That's where I'm going. You wait for the market to come down to the low of that same high, the low that high created, and wait for the market reaction to it. But if the market has not gotten to that level, if the market go back to the liquidity point, it's going to be an opportunity for you to sell. I will show you more than today. We sold today and we are profiting. And I'll show you where it has happened before also, and it will be possible if you follow the same rules. So now what did you notice? The market will make its way rally up during the London session towards that liquidity. As the moment the market gets to the liquidity, I know the market is not going to beat the liquidity. So what it's going to do is that it's going to come back. But I did not know if the market will make its way all the way down here. And the reason was because market has created fair value gap. Now, because fair value gap has been created here after this liquidity has been swept, so I believe that the market, this fair value gap can hold as the market makes its way all the way up. So what did we do? We sold from here, and we take profit at the point which is 3366, meaning that is where the next opportunity for buy will be a fair value gap. This gap that this sell can do, this green candle and this green candle create, the gap between them is what we call fair value gap. So as I know that market can come to this level for a buy, so we get out and we make profit. And anybody that wants to take their buy will have taken their buy and also set that take profit at the high, which is the liquidity level that was created. But I think that would be gambling. The sell is more reliable than the supply. Okay, then now what will make us to think about buying will be that this particular liquidity. Let market also come and sweep this liquidity. If the market sweep this liquidity, what we're looking at is that some people that think the market will sell would have actually taken their sell trade and hope that the market will not actually go below and go above again. So market will do what? We come down, take them up in, activate them at any point, then probably start buying up again, like we are seeing the candle buying currently. So what you can do at that moment is that you know that, okay, I've taken my sell, I'm waiting for the market to take this level out, to sweep this liquidity like it did now. Then the sweep of the liquidity will now determine what you are looking at. In this case now, I'm looking at sell. Now, this is a little bit complicated and I will explain. Why is it complicated? This has been swept, which gives more reason for the buy to continue. However, the market has to close above this zone before you can actually see a buy to continue. But there is a fair value gap even before that level. So if the market reacts to this fair value gap here on 5 minutes, 15 minutes, I can sell off, still take my profit, first take profit here, the next take profit here, the next take profit here. Now, I said I will show you where it has happened before now. Look at here. The market created a low, which is now the liquidity, the sell side liquidity. Okay. Then the internal buy side liquidity, which is internal. If this is the normal buy side liquidity, but this is the internal one for that region. So we have this buy side liquidity for that particular move. After it, you wait for the market to react to it. Now, when the market did not close above it, like I said, what did you expect that the market will do? We come back to this liquidity level. We come again and to come and sweep. Just like the market came and sweep this particular one, we come back. Anybody that take a sell all the way down here, they make profits. Anybody that thinks, oh, the market was rallying up is going to buy above it. It's just an assumption. This liquidity has not been swept. Just like the market come back and come and sweep this liquidity, which is the only reason why we are thinking of either buy or sell now. In this case, also, the market will sweep both sides. The market has come, make advance to sweep, but did not sweep it. Come back now to sweep this point to give anybody that will now want to think about buying opportunity. But like I said, in this situation, I will only be thinking about buying when the market reacts here. The same way I'm only thinking about more sell. Why I did not sell all the way down. I sold only to this value gap. The same way you will be looking at buying from after the market has closed above this change of character. Just the same way I will be looking at to sell as the market gives me opportunity below the zone. And I said, since this is a discounted better point of entry, is where I will be thinking about sell, and I know my stop loss will be tight, my take profit will be big. So even if I just stop out, if I sell here, I know that it's still much more better than to actually play a gamble at the wrong point. Now, if the market is going to continue as a bullish movement, bullish market, the normal thing for you to actually close above this liquidity points that we have here now. As simple as that. Now, if you still don't understand this, you can reach out to me, get the indicator, and understand. Now, this indicator, I'm not going to give it for free. It's $10. You can go and look for it and get it. It's available. But if you want from me, you get it for $10. But also, if you pre-order my hard money concept indicator, you will get both of them. If you pay it down, the indicator will be available on Friday. If you pay it down, you are going to get this and get that particular one both for the $20. But if you're getting this alone, $10. Anyone you want, I'm always available for you. If the ones that you want are free indicators, many videos have been done on free indicators, free EAs. Watch them, follow the rules, come and you will get them. I love you. I'll see you in my next video. But before I go, let me show you about the indicator. This side I'll fast forward. So this is it. It's not fully ready, but very soon, before Friday, it's going to be ready for everybody that pre-order. You're going to get it, and it's going to be showing you the liquidity pool, the active FCG, the signals, when to buy, when to sell. It's going to be ready for Friday, and this you can see it's powerful on its own, but it's going to be much more than this. And if you pre-order it, you're going to get it for that small price of $20. I'll see you again by next week.